Hey everyone, this is John here with you. It's Tuesday night, the 25th. This is Thanksgiving week, of course, and things have been pretty slow here in the market for the past couple of days. But we've just continued to creep on up as usual, even though we had a slight down day in the SPX today. But overall, we've just been trucking on upwards. So it's not a lot of exciting stuff to go on, but still we need to talk about a few things. So we're going to go ahead and just jump right into it. Before we get any further, please remember the disclaimer. Everything that we cover here is for practice trading only and for educational purposes only. Please don't take anything I say or show as any kind of advice about what you should or shouldn't be trading or what positions you should or should be getting into with your own account and own money. And even though we look for low-risk types of trades, there is always risk in trading. And I don't have any trading restrictions on myself, so I could be in any of these at any time. Okay. Speaking of that, before I forget, I want to show you one thing here. This position we were looking at last week was the market came up here. So it's Tuesday, Monday. This is Friday, Thursday, the 20th. Right, Thursday is the 20th. The market came up here and closed at 2052. All right, and I don't know if you remember Friday morning, but last Friday morning something good happened. I don't know what it was, but there was some good news. I don't remember, but the market, the futures were way up. The SPX or the S&P futures were up like 12 points, 1275, something like that. And the market opened up on an up note. The settlement came in at 2075.42, and you can go to the CBOE's website and go to cboe.com, click on the data tab, and then under that you'll see index settlement values, and look at the November settlement values, and you'll see the SPX settlement came in. I think it was 2075.42. So basically the settlement came in right there. Now what I will tell you, 2074. I'm sorry, 2074. No, yeah, 75. 2075.42 I think is what it was, but you can go double check. But the what I wanted to tell you was this trade, I had a very similar trade on, and now that it's over, I can talk a little bit about it. I had a very similar trade on for November, and the bottom side wasn't exactly like what we have here, but it was very close. I actually owned the I think it was the 2000 is what I ended up owning, the 2000 put, like a 2000 1980 put spread, and then I was short a 1980 like 1950 put spread right behind it, and I had as many as like 6 or 7 contracts on, just kind of like we do here. But on the top side, I actually had this same position on the 2060s, 2080s. I was short at 2060 going into last Thursday, and I had been able to maintain a credit, and I'll just type this on here so I don't lose track. I'd been able to maintain a credit of 305 on this particular trade, and I had to go back and look at some of my cost basis and figure that out. But I maintained a credit of 305 on this trade. So what happened was Thursday, and this wasn't until about 3:30 p.m. I waited till the very last minute because I wanted to get out as cheaply as cheaply a word as cheap as I could. I want to get out as inexpensively as I could. And so it wasn't until about 3:30 Eastern time on Thursday, not Friday, but on Thursday, that what I did is I went in here and I bought back this call option, this 2060 call, because I was fearful of the Friday morning settlement. And sure enough, lo and behold, the Friday morning settlement came in, right there at, like I said, I think it was 2075.42. It came in right there. And so what I did is I bought back this 2060 call before Thursday's close, about 3:30 p.m. And I paid 80 or 85 cents. I don't remember which, but I paid about 80, 85 cents for that. And I actually held the 2080. It was only worth about a nickel, so it wasn't really worth selling back. It wouldn't, depending on how many contracts you have, it wouldn't have done a whole lot more than cover commission. But I held the 2080 just as a cheap lottery ticket. But the market settled there at 2075. And if I would have still been short that 2060 call, that would have hurt bad. It would have hurt bad because my 2060 call would be 15 points in the money, and I would have taken a $15 hit on that. That's $1,500 per contract. Even a one contract position like this, it's $1,500, and that's not pretty. You don't want to do that. That is something I will not do, is I will not go into the settlement with the market here at 2052 on Thursday and then take that risk. Yeah, it could have come in lower. The settlement could have come in at 2050, or it could have come in at 2059, but it didn't. It came in at 2075, and the market's been so bullish lately. And let me take that back. I shouldn't have even said that. Even if the market had not been bullish lately, even if it had been very bearish lately, I still would not have let this thing go into settlement Thursday's close without getting out of it early. Because Friday morning we woke up, market opened up on some good news, which seems to be the case these days every day, and the market settled there Friday morning on 2075. So that would have hurt. That would have smoked us on that one, right? So I did the right thing. I got out of that 2060 call. I wish the settlement would have come in a lot higher, maybe like 2085. Wouldn't that have been nice? Settlement coming up there, and my long 2080 that I own would have been $5 in the money if the settlement would have come in that high. So there's no risk in holding that 2080, that option I was long. There was no risk in holding that thing. It was a cheap lottery ticket. And if the market would have just opened up a little bit more bullish that morning, I could have had a nice chunk of little change in my pocket there, but it didn't happen. Thing came in at 2075, like I said. So, but anyway, my total credit I maintained was 305, and I'll just be conservative here. It was either 80 or 85 cents, but let's say it cost me 85 cents to get out of that. So I was left with a total credit at the end of 220, right? A total credit of $2.20. So not the best, but still not horrible either. It's still a profit, So I was happy with that. But boy, I tell you, it was a lot of work through that thing. Hey, folks, give me just a second. Hold on, please. All right, sorry about that. But so what was I saying? Oh yeah, we were down to 2020. Our doorbell. I don't know what it is, but our doorbell has some kind of short or something in it, and at the oddest times it will just ring, and no one's ever there, but still you run to the front door to check. So that's what just happened. You might have heard the doorbell ring in the background, and sometimes, and it's not often. It's like once a month in the middle of the night, 3 a.m. the doorbell rings. Of course you think, okay, it's some whacked out stranger, going to try to break in or something like that, but no one's ever there. It just does it from time to time. So. I don't guess the place is haunted, but it shouldn't be. But anyway, so that's what happened with this particular trade, and this was a frustrating month. It really was tough. I'm not going to go back and say, oh, it was easy. We had it under control the whole time, and even personally, what I had on myself, it was tough, and it was something that you've really got to put your knowledge and your skills to work, and you've got to get creative. And I would like an easy month every month, but it just didn't happen this time. It just didn't. But that's really where you learn the most, is when these months when it gets really frustrating and you have to grind out some skills here to fool with this. And I tell you, on Thursday, I'm not going to lie to you. Thursday, I'm not going to say I was fuming mad, but I was just so aggravated because yet again the market opened down. Look at that, the market opened down. On Thursday, let me move this out of the way here. So the market opened down right here and started selling off, and you said, you know what? I said, today's the day. It's going to pull back good. I'll let that call spread expire. I'll keep that 305 credit. I wasn't jumping for joy, but I was feeling pretty good. And I tell you, sometime during the day, I don't remember when it was. You see that wick on the downside of this candle right here, but like it's done every day. It just turned right around and went up and closed up, and I said, man, I'm going to have to pay 80, 85 cents, whatever it was, to buy back that short 2060 call. And, I could have taken the risk. But, folks, that something I do not like and I do not approve of. And I have people say this to me sometime when I'm out teaching a live class. They'll say, man, I took a risk and I held on to it. Don't do that. This is not gambling. It's not Vegas. It's not something we're out here to do. Just for a high, it's a real business. So we've got to treat it like one, and you don't take these unnecessary risks. When I can shut down my risk for 85 cents, you don't hold on to it, because here it would have smoked you. It really would have, and you've just went through all that effort and time and frustration, and then you end up in the hole, right? How much in the hole? $15 in the hole. Well, minus the 3 credit, So I would have ended up $12 in the hole on this, and that would have been bad. Okay, And it's simple to clear out that risk. You just buy back that short call. I held that 2080 as a lottery ticket. It didn't pay off, but so what? I didn't really risk anything doing that. Okay, I'm glad this one's over with, and I tell you what, we're just going to get rid of it. That's it. It's gone. We're not going to look at it anymore. Here's the position we have on now for December week 2, and again, this expires on the 12th of December, right there. Okay, so not too far off. At the end of this week, we're going to be on the first Monday, and we basically have 2 weeks after. Basically after tomorrow, because on Friday the market's just open till 1 p.m. Eastern Time. If I'm not mistaken, I think it's 1 p.m. So, we basically have 2 weeks left in this trade. I don't expect there to be a lot of action tomorrow. It's the day before Thanksgiving, but I could be wrong. But here we are again. The market's come on up, and it's just relentless. It's not going to pull back for us. It really isn't. I just don't think so. It just doesn't seem to want to pull back. And boy, look at that steep run there. But here's where we are. We have 475 credit. I highly suggest you go back and look at the last update. We reviewed this sheet here on the last update, if you remember, and I kept it saved here for us so we could look at it again. But it shows what we did with step 1, step 2, and our resulting trade. Okay, so this is what we have on right now over here in black. We have a 120.40 that we own, 120.30 that we're short. Then we're short again down here at 2000, and then long at 1960. Okay, so on the downside right now, we have 30 points at risk because we're long a 10-point spread, the 2040, 2030. We're long that, but we're short 40 points here, right? So we have 30 points. I'm sorry, we're short 40 points right here at 2000, 1960. So we have 30 points at risk minus the $4 credit or so we've taken in, and so. I'm not really worried about the downside. I'm not worried about this thing pulling back to 1960. It could happen in the next 2 weeks, but it sure doesn't seem like it wants to. And it would have to be a pretty bad fall for that to happen. But here's the situation we're in right now. If the market keeps going up, we're going to have to do something with that 2080 call that we're short. Thank goodness we're only short 1, and we've got a good credit build up. But what we'll likely do with this if the market keeps heading up is a couple of things. And again, this looks like, I could be wrong, but this trade looks like it's shaping up to be one of those frustrating, we're going to have to fight with it all month types of trades. And it's unfortunate, but we've got to be realistic here. We can't just, think it's sunshine and rainbows all the time, because it's not. So we're going to have to, use our knowledge and skills here to deal with this. But most likely what we'll do is if the market goes on up, and write this down, get something to write with. I'm going to say it, and then we'll look at it. We'll price it out. But what we'll likely do if the market goes on up is we'll buy a call butterfly, and the call butterfly we'll likely buy in this trade is a 2080, 2100, 2125. Maybe a 2120, but probably a 2125. So say it with me again: a 2080, 2100, 2125. And so what that will do, if we buy a 2080, that means we'll be buying to close that one that we're long. We own a 2080. We'll be buying to close that one we're short, because we're short at 2080. So if we buy that one as part of a butterfly, we'll be buying to close that one short 2080 right there. Now, if we sell 2 as the body, remember, if butterfly is a 1-2-1, so if we sell 2. We're buying 1 here at 2080. We're selling 2 at 2100. If we sell 2, that's going to leave us short 1 at 2080. I'm sorry, at 2100. Because we own a 2100 now, if we sell 2, we'll be selling to close the one we own, and then we'll be selling the second one, which will be a sell to open. So that will leave us short 1 at 2100. So the 2080s are gone. We bought to close the only one we had. So that one's gone. We sold 2 2100, so now we're short 1. And then if we buy to open a 2125, that's what we'll have as a butterfly. We'll be short 1 here at 2100, long 1 at 2125. Okay? Long 1 there. And I hope the market pulls back. I really do. I'd love for that to happen and not have to touch this thing. But that's the first thing we're going to have to do is likely roll that up. Now, what I'm going to do here is I want to look at the December weekly. So let's do that. Okay, so here we are on the expiration of the 12th, and you can see that on the option over here, the D12s. So again, what we're talking about doing here is buying to close a 2080. We'll do that for 920. Let's just price this out so I can show you how to do it. We will be buying to close that one for 920, and then we'll be selling 2 of the 2100s probably for 305. Okay, for 305. So if we sell 2 of those at 305, we're still at a debit of 310. Okay, 310. That's going to leave a short one at 2100, and then the 2125s we could probably get for 95 cents. So we're going to add that on, 95. So 405 is what that butterfly is going for. Okay, 405, a debit of 405. So again, for us to buy butterfly 2080, 2100, 2125, which will leave us with basically a short credit spread, one contract short spread of 2100, 2125. That's going to cost us 405. Well, how much credit do we take in? 475. So now we're down to a 70-cent credit. So let's hope we don't have to do that, but definitely a possibility. Okay. Now something else we'll do if that time does come and we have to roll that call up, that 2080 call, if we have to roll that thing up with that butterfly, what we'll likely do is we'll sell this vertical spread here, this put spread that we own at 2040, 2030. We'll sell it out and collect some premium for that. Okay, we'll sell it out. We only have 2 weeks left. If the market gets up close to 2080, I don't see it pulling back to 2100, which would be our pain point. I don't see that happening in the next 10 days of trading. It could, but I don't see it. Hopefully it won't, and if it does, we'll deal with it. But if we have to pay 405 to roll this 2080 call out of the way with a butterfly, basically we're rolling our short up to 2100. So that gives us 20 more points of wiggle room there on the upside, which we could very well need over the next 2 weeks. This thing keeps trucking on up. But what we'll do to help pay for it is come in here and sell this 20, 40, 30. And right now, I don't know how much that's going for, but we'll look. The shoot, I just lost it. There we go. So the 20, 40, 30. There's the 40. We own the 40, right? So we own the 40. We're short the 30. Just one contract. So if we come in here and we do this, if we sell the 40, we could sell it for 750. And again, I'm just cutting the bid-ask spreads right down the middle. Could we really get filled for that? If we're patient, probably so. We might have to give a nickel or so on it, which is often the case. But 750, and we could buy to close the 2030 short for, we'll say 590. Okay, so that's a $1.60. So right now, if we did this right now, our credit, and I'll actually just put this over here in another box, it would go from 475, which is what it's currently at. We're going to have to pay 405 to get rid of that, roll this call up, right? So that leaves us with a credit of just 70 cents. But then if we add to that $1.60 that we can sell out that 2040, 2030 vertical right here. If we add that $1.60 to that, well, I mean, we're not a shining star or anything, but it's better than being abused here. But we're back at 230. Everybody see that? We're back at a credit of 230. So, and we might end up with that. We might end up with just a 230 credit on this thing. I'm not sure, but we'll see what happens. But we would still be operating at a credit, and there's some other things we could do to take in some more credit. But we just don't know if we want to do them yet. That's the problem. But that's what we would that's what we would end up with if we made those moves. We're not going to do it yet. We'll wait and see what the market does tomorrow, and then the little bit that it trades on Friday, which will likely be just a dead day. But I tell you what I would like. I would like to go into next week and see a nice pullback here. We are so overdue for one, but it just doesn't seem to matter these days. I mean, look over here where RSI is. It's 82 right now. But look at this. It's been up there. I'm looking at the green line here. It's been in this overbought territory above 70 for almost a month. No, not quite. 3 weeks. But it's been way up there. And it's happy just hovering there. But I would really like to see this thing pull back because we are in overbought territory. And, normally when we get up to this area, we have a pullback. Might not be huge, but you see right here how the market pulled back some. And again, this is just a preset template. I'm just looking at it here to show you RSI. But right here, it got up to 86, and the market pulled back 2 or 3 days. That would help us tremendously to see that. Even a good down day or two like this, or right here that we saw in early July. Even just 2 or 3 good hard down days will do wonders for this trade and pump up the profit on it pretty quickly. But we just don't know if that's going to happen, so we'll deal with it as it comes. Okay. Give me just a second here. Let me take a look at something. Okay, I just wanted to check something there real quick on some numbers, but it adds up as I was saying. But that's what we'll likely do if the market hits on it much more. And again, it's not one of those decisions that has to be made like right now at 10:35 a.m. tomorrow, if that's the time, or you'll miss it. We can we can be a little flexible with this, but still, I'd really like the market to pull back. And something here, with only 2 weeks left to go, if we could just have a nice little pullback from here down to like 2025 or so. I mean, if we could just pull back just 20% of this run, just 20% of it, and pull back here to 2025 or so, that would leave our vertical, our 40-30 vertical that we own, leave it in the money. So we would not only have this 475 credit, but we could cash out that $10 spread right there. Right? We could cash that thing out. And, we'd have 1475 in this trade. So we'd be, in really good shape. But, again, the market just doesn't seem to want to do that, and I'm betting. I usually don't bet on things, but I'm betting that it's just going to keep heading on up. Okay, so we'll see. What I plan on doing is tomorrow. I will likely do another update tomorrow night, if not, definitely Thursday night, Thanksgiving night, and it'll likely be a little bit late. We have some family coming into town and all that. But we'll do a second update before the week's out. But to be honest with you, this week is likely just going to be dead the rest of the trading days, tomorrow and a little bit Friday. So probably not a lot of new information to add. We'll look at this position again. Excuse me. We'll look at this position again, and then we'll maybe stick on something new, just real short term. Something to practice if you wanted to. Just for practice purposes. If I haven't looked at this at all, but let's just go in here and take a look. Friday is the weekly expiration for the, and right there they are, the 28 expiration for November. Something we could do if you were still very bullish and thought the market was going to continue on up. The market right now is at where is it? 2067. 2067. All right. So this is a last minute type trade where you have to be quick on your feet. You got to be paying attention. But something we could do. Let's look at coming here and doing like a 1-3-2 put butterfly, and we'll price this out and see if it's even worth doing. The volatility is down so much right now. It might not be worth doing, but if we could buy the 2055 for $1.40, we could sell 3 of the 2050s for 95 cents each. Right, that's $1.45, and then if we came down here to like 2040 and bought 2 of those for 50 cents, that would be $1. So we put that on for a 45-cent credit. And here's what I'll do. I'll actually I'll do it like this so we can all see it. So right now the market is at, what I say, 2067. Market is at 2067. And today's date's 11/25/14. And so for the November 28th weekly expiration, I'm just writing this out as I'm saying it, what we were talking about doing is buying to open 1/2055. So that first put is already it's already 12 points out of the money. Okay, and selling to open 3 at 2050. So just right below it, and then coming down here, we're going to do an unbalanced broken wing. The unbalanced because it's a 1 through 2 3. So that's the unbalances in the contracts. Excuse me. And that we could put that on right now for 45-cent credit. And all you have is tomorrow and about half a day on Friday. So if you feel like for the next day and a half of trading that the market will stay above 2050, this might be something that's interesting to put on. You feel like it'll stay above there for the next 2 days. Now, if it doesn't, if the market starts falling and we become fearful of the market going too far, there's a couple things we could do here. Number one, we might need to roll these puts up to 2045 to at least balance the butterfly, at least balance it, and then and after we move it up to 2045, then buy to close one of these and then sell to close one of the 2045s. So basically buy a 2050, 2045 vertical debit spread to completely balance the butterfly out. And we have 45 cents credit, so that'll help pay for some of this stuff. But that's something that can be put on. If the market stays up above 2055, of course the thing will expire worthless and we'll keep the credit. If the market finishes at, if it comes down here and it finishes at 2052, we would make how much on this put? This is some good practice just to go through this. We would make $3 on the put, right? And everything else would go out worthless if the market expired at 2052 on Friday. We would make $3 on the put plus the 45 cents. We would make $3.45. $3 profit on the put plus the 45-cent credit. So that's I'll save this and we'll look at it again. But this is something, just a little practice we could put on here. So let me save this. So well, I'll save that in just a moment. But so folks, that's all I have for you here tonight. We'll pick it back up either tomorrow night or Thursday night after Thanksgiving. Everyone have a great Thanksgiving, by the way, and I will catch up with you in a day or so. See you later. Bye-bye.